Hello guys, how are you? I hope all of you are good. I am coming back on YouTube again after a long time, after a long break. I was a little busy in my works. That is why I was not uploaded any videos from last 2 months. So today I am going to share with you today last Monday's trade breakdown. How can we anticipate the trade that formed on MNQ Micro E-mini Nasdaq 100 futures for June contract? Here you can see the contract name. So first of all, we come to the daily chart. I'm going to read the price action of this day, Monday 4 May 2026. On that time, price was traded at all-time high, as you can see, I marked here. There was a SMT formed, but not at the opening at 10 a.m. You can see that I'm talking about this one. This is SMT. Now come to the 4-hour chart. Here you can see that this was the order block with fair value gap. Price opened at this price, traded higher. There are nothing much more clear in 4-hour than 1-hour chart. So this is the order block with FVG. As you know, price is traded at all-time high, so we should think twice before take a trade for shorts. Now come to the hourly chart. Here you can see that price given expansion of almost 246 points at 6 a.m. So we should avoid trading inside this range. We should wait for price to take the high or the low of this candle. We don't trade in between this range. When price traded higher and takes out this high of 6 a.m. as well as it formed an SMT with this candle, you can see there. No way. This one. This is the SMT with Dow Jones. And price also traded and closed inside this range. So after price confirm this, we should look for shorts and our target should be this candles midpoint of 50%, and the last target is this low as well as because there is a order block of 4-hour we marked before. Now come to the 30-minute. Here also you can see that price closed inside this range at 10:30 manipulation. Now let's see what are the entry points. How can we take entries in this trade? So as you can see that this is the manipulation leg and we should find out the entry at manipulation for good RR, risk reward. So price closed below this and confirmed this order block. These three candles are order blocks because price closed below it. This one, this opening price become the order block, but I marked this one. Why? Because there was no wick. There is no wick. You can see that. And I trade I mark this candle as order block because there is a liquidity pending right here. So we can take an entry. This could be a entry point for shorts in the 5-minute chart. You can see the time frame right here. This could be our selling point, and we can take partial at this area here, here, and hold till this here. Now come to the 1-minute chart. Let's see. I'm using this go to because it makes it easier to go there where we want to go fast and precise. So first of all, we mark this 9:30 opening price. Price open formed an regular trading hour gap. This is the high of regular trading hour gap, and this is the low. I marked also a quadrant right here, and let's see how price anticipates and respect these areas. So price open came lower, did not close any body below the opening range gap, then it traded higher. There is choppiness, and we don't trade in the choppiness. We look for clear price action, only then we will take entries. Otherwise, we will wait. And price moved higher, 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 and as we marked before, this SMT as well as price closed below this range. This is the range high, and this is the order block of 5-minute chart. In 1 minute, you can see this time first. This is the time 10:50 to 11:10. This is the reversal macro time. So price formed an SMT right here with ES. You can see there. Here, this is the SMT. Price took out these highs in ES and did not took the highs in Nasdaq. Then price drops lower, closed below it, and formed a market structure shift. This is the market structure shift, and also created this fair value gap with aligned with this discount wick. I marked this discount wick with quadrants, and let's see how price respect these quadrant levels inside this fair value gap. CB, sell side imbalance, buy side inefficiency. Pardon for this mistake. This is at 10:50 to 11:10. That's the right time. This could be a first entry point at the top from this week discount week inside this CV. Then it drops lower, close below the first printed fair value gap, which this one, the first printed fair value gap. Then price reaches this first printed fair value gap and close below it and formed again a CV. And this become a continuation of selling order block with this fair value gap. After respecting this first printed fair value gap and the sell side is resting right here, we can take entries at this point as well. This could be a high probability sell at premium. Why I write here premium? Because let's mark it. This is the low of discount. This is a high premium. Okay, this is the midpoint, and this is above the 50% of this range. That is why I mark here premium. This could be also the last entry in this selling leg, and as I marked before, this was our target, last target. So price drops lower, takes out this lows, and got the liquidity, as well as it traded to this regular trading hour gap high of Friday. Let's come to the regular trading hour gap and you can get that. This is the regular trading hour gap of Friday. Price traded there and respect the area and starts moving higher and higher because price is in all-time high and super bullish. That is the reason behind it. So that is how we can anticipate the selling on Monday. I hope you learned something, guys, in this video. I will talk to you next time with the next video. Until then, be safe. Bye bye.